Hello, it's Brad Laurie or BlockchainBrad, and today I'm speaking with Thomas Heller. He is well known, if you know anything about mining pools. He's the Global Business Director of F2Pool. Thomas, thanks mate for being here to tell us all about what you do as the Global Business Director.
Brad, thank you very much. Always great to see another Aussie in the world of crypto.
Go the Aussies.
Very, very grateful to be here today. Looking forward to the discussion. I'll maybe give a small background about F2Pool as a company. So actually, we're a mining pool. So actually, you know, for Bitcoin, Ethereum, Litecoin, and many other currencies, there's miners all over the world. But the blockchain networks are very competitive now. So the miners have to join a mining pool. So we have a bunch of miners with our mining pool. We support 46 currencies. And basically, my job is interfacing with them, understanding their needs, working with them to bring to our pool, building features for them, and just making them have a very smooth experience. So that's basically what I do every day.
Okay, and that sounds like a very busy day. Now, we're going to try and unpack this as much as we can, but for those who are listening, just want to be really clear, this is entirely free. This is all about information and just allowing people to have a better understanding of the importance of mining pools, what they do, and more importantly, also exploring and extrapolating mining itself. Now, PoW, that's a big deal when it comes to proof of work. We know that's the original iteration for all blockchains out there that have that connection with crypto. Your slogan on the website is the new mining experience. So do you want to just touch a little bit on what is a mining pool? Because you are the world's largest when it comes to crypto. And just so that people who are unfamiliar with this can really get a hold of what it is.
Okay, fantastic. I'm going to use Bitcoin as an example just because most people are familiar with Bitcoin. Okay, so back in 2009, 2010, when it was mostly Bitcoin was for hobbyists, right? Actually, miners could use their CPU at home to mine Bitcoin. Over time, as Bitcoin became more and more popular, we moved from CPU to GPU, so graphics cards. And then further on in 2013 and onwards, people would actually make dedicated devices called ASIC, ASIC, and they would actually only mine Bitcoin or anything with a SHA-256 algorithm. So, okay, if we went back to 2009, you know, maybe you have 5% or 10% of the whole Bitcoin network. But nowadays, it's just not feasible for an individual miner to mine themselves. So if we were to take a new gen machine, maybe a Watts miner, M20S, or a Bitmain S17, I was doing the calculations. With a Watts miner, you maybe have a 1 in 16 million chance of mining a block. So to mine the block, that's when you get the block reward. And which means if you run this machine for the next maybe 10 years, you'll never find a block. So that's the primary reason why people join a mining pool. So by joining the mining pool, each of the miners share their computing power. And if the pool itself mines a block, then the reward is distributed accordingly. So in that one Watts miner example, instead of waiting 16 years to get one block and getting a lot of money, you would actually get daily payouts of a very small amount, but that would add up over time. Right now, I think maybe a Watts miner would make around $7 to $10 per day. Take away electricity cost, and then a few dollars left over for profit.
Got it.
So that's the primary reason, yeah.
So basically, it means that they can have more revenue on a daily basis as opposed to doing something, you know, trying to solve those cryptographic puzzles alone and you know, it takes such a long time to do it. So, you know, we're going to explore what's involved in getting into one of these pools. Now, what is interesting is the pool concentration as well. I had a look at the information available on your website and just other stuff I found. China still number one when it comes to, you know, having that dominance. Do you want to give us a breakdown a little bit on where in the world, you know, there is that prevalence of mining pools and, you know, how important China is?
Okay, cool. This is actually one of the hottest topics in general in the mining industry. So firstly, there's two parts. One is where are the miners themselves located? So as F2Pool, around 75% of our miners' hash rate is coming from China and 25% from outside of China. So even though we were founded in China, we're becoming a global pool. So the first part is the miners, the machines themselves. Second is the pools. Actually, I will just point out a very, very useful report called CoinShares. So they produce a report twice per year, and they really break down in detail different regions throughout the world. But I'll give you a high level. Around 60 to 70% of the Bitcoin hash rate is in China. I would estimate around 20 to 25% in Europe, Russia, Middle East, and around 15% in North America, and then scatters in different places. Of the mining pools, so I'll say it by order of size. So F2Pool, as I said, the proportion. Pool in probably has a high proportion in China. BTC.com, a high proportion in China and some in Russia. And Pool, mostly in China and some in North America. Slush Pool is one exception. They're from Czech Republic, and they have miners all over the world. So actually, from a global level, I would say Slush Pool, F2Pool, BTC.com, Ampool, and maybe via BTC have the most proportion of non-Chinese hash rate.
Okay, so do you find that it's growing also, that like you mentioned, even though it might be in certain regions, in fact, it is becoming more decentralized for them, or there's more parties involved globally? So is this number growing where it's expanding around the world? Because I noticed countries like South America, for example, you know, they're starting to come up a bit more. So is that trend growing? Or because a lot of people criticize sort of the monopoly of China, you know, if we go back to 2017 or, you know, even before. So what are your thoughts on how we've evolved?
I think firstly, it's a very valid concern. So, I mean, I'm based in China, and I've been here for a few years. I speak Chinese. I love China, right? But I don't think a large amount of hash rate centralized in a single country or location is good for the network. We're definitely not at the level where it's a threat. But if we're at like 65% in China, I would say, there's one very important thing. In China, there is a hydro season where during the summertime, there is abundance of water. So actually from end of May to November, like there's just a huge amount of cheap power in China. Then outside of that period, they have to move the machines to other parts of China. So in 2019, we saw an increase because, you know, the manufacturers are also in China, so they can get the machines put in the farms very easily. But in the past few months, we've seen more and more farms set up in Kazakhstan, in US, in Canada. Texas is a real hotspot right now. There's big companies, Layer 1, Northern Data, Crusoe Energy, Immersion Systems, a lot of them popping up now. You know, Americans are always very loud and confident, so they're always like sharing how big they're getting. So it's still a bit yet to be seen, but in Texas, there is a cluster starting to grow.
Yes, and a lot of people are talking about that. Now, in terms of energy costs, you mentioned about the hydro. I find that really interesting because that correlates with a very important event that is coming up for Bitcoin in May as well, and we'll talk about that later with the halving. But in terms of comparisons to the costs of that hydro power, I would imagine it's a lot cheaper in that period of time if there's a surplus of, you know, if the water is, you know, generating the power. So have you done an assessment of energy costs in those other regions like Texas, for example? Are they going to be competitive, you know, in that sense?
I'll share with you. So well, firstly, we have to consider there's different models. So some miners will set up a mining farm like a data center and put their machines inside and keep the rewards for themselves. Some people set up those mining farms, data centers as a co-location hosting facility. It means other people put their miners inside. So there's kind of two price points we analyze. One is the electricity or power cost price. Second is the hosting price they would charge to clients. Okay, so for China, during that hydro season, they're kind of hosting or all-in management fee of around 4 cents or slightly less. For the non-hydro season, it's more like 5.1 to 5.4 cents. Now, during the non-hydro season, I would say on a global level, other countries are very competitive. Actually, China does not have a huge price advantage in the non-hydro season, whereas in the hydro season at 4 cents, it's very competitive. 4 cents, where could you get your machines hosted for? Russia, Kazakhstan, Middle East, maybe South America. It would be quite rare to find in North America. Having said that, there's guys in Texas. From what I've seen, I need to look deeper into this, but 1 to 2 cents as an energy cost price is doable in North America, in Texas, but it doesn't mean it's very common. There's guys doing innovative things with natural gas and the flaring of that and reusing that, which is good in general. And they're getting relatively cheap prices. But so to summarize, hydro season in China is definitely a point where they're very, very competitive, and outside of that, not so much.
Right, it's really good to know, and it's also good to hear more sources of energy are being used, like water and like gas, for example, and also we're talking solar in the future, I'd imagine, as well, in different ways. So it's exciting to hear that there is a less sort of, I guess, environmental concerns with the means of, or the source of the power. Now, let's go back a bit more. You mentioned interesting countries like the Czech Republic, even Iceland, Russia, Georgia, Japan, they come up. Now, how important are all of those parties when it comes to, really driving the mining itself? Because I still want to understand this in terms of making sure that there is a degree of fairness in this process. You being in China, obviously you know what's going on there, but are you paying attention also to those parties that essentially are players in the space and have been for some time?
Yeah. So we can kind of look at the supply chain. So from the very beginning, it's those very specialized chips for the ASIC machines. They're manufactured in South Korea with Samsung and TSMC in Taiwan. So for example, Bitmain, Watts Miner, Canaan, Silicon are the biggest manufacturers. So they get the chips from there, but those four manufacturers all located in China, Shenzhen and Beijing and Wuhan. Okay, so the production of those new gen machines is centralized in China, which gives a huge advantage to the local Chinese miners. So what I've seen last year is that, and if anyone wants to look at the hash rate from 2019, around April to October, it went from about 40 exahash to 100 plus. That was a lot of new gen machines coming online. Chinese miners were able to get on it early, and the non-Chinese miners a bit later. You mentioned a few countries, so Scandinavia, Iceland, Norway, Sweden. They probably popped up around 2017, 2018. Just very competitive power prices, good regulations, and clean energy. And then 2019 was definitely a big increase in Kazakhstan. Russia always has a new mining farm set up, but it's kind of very gray. It's like, I would say, as a miner, the places where if power is equal across the board, you'd love to set up in Scandinavia, North America. It's just a lot more clear and transparent and regulated. But Japan you mentioned, I think there's a company called SBI Crypto and GMO previously getting big into it, but it's not like the mining is actually happening in Japan because the power prices are too high. But they've got funds coming from there. They're setting up facilities in different locations. Basically, it's a battle for miners to find cheaper power in stable and safe locations, as well as by newer, more efficient, more powerful machines.
Got it. And it does seem also, Thomas, that you being based in China, you have the competitive edge, because not only do you have the great price point, and that's coming, as soon as the hydro season kicks in, but you also, the China produce those next gen hardware facilities, that are really going to kickstart the next move, the potential for this to really move forward, because obviously the better quality of the machines, the more successful those miners are going to be, and the more successful those mining pools are going to be. So do you feel that China even today still has that, that front running move, that I guess pole position in the race?
They do have it right now. Considering from the mining perspective, I mean, the other very important thing to consider is just the global economy. I mean, we've seen last week with the Bitcoin price, Bitcoin is still heavily impacted by what happens in the global economy. And my point is, just comparing the responses with the COVID virus from the Chinese government and maybe the US government, it does seem the Chinese government has a better handle on it. And it really does seem that they may come out of this in a stronger way. So from both perspectives of the mining, the machine setup, the farms, but also the economy as a whole, right now China is a better position. Yeah.
Right, and we're going to talk a bit more about that. You being in China, it's going to be fascinating to talk about just, how the sort of virus is playing out there, what impact it's having, because you are literally there. That's, there's no one better to really talk about that. But if we move back to just understanding the scope of mining pools for a moment. Now, you're number one in the world for representing mining pools, but there's a lot of others. So how important is it to have that diversity? You mentioned Pool and BTC and Pool, and the list goes right on. But is diversity a boon? Is it a good thing to have all of this? And, do you monitor what they're all doing as mining pools?
I'm watching them very closely, always knowing what's happening, where they are, what they're building. Because, okay, on one hand, mining pools with a large amount of hash rate is a risk to Bitcoin. Because if those mining pools did decide to collude together, maybe do malicious things to the Bitcoin network, it is a potential threat. On the other hand, actually knowing the people behind these pools, they're disincentivized also to do anything malicious to Bitcoin. I mean, the guys that made these mining pools have been around Bitcoin for many years, and they want to see Bitcoin grow. But that's from me knowing these people. Right. Between different mining pools, there's not a huge amount of difference. I'll just quickly summarize for everyone. One key thing is which coins they support. So F2Pool supports 46. Other pools support in general between 2 to 10. So that's one of the things we kind of prioritize on, is working with different PoW projects. We love Bitcoin, of course, but supporting different projects. Other ways to differentiate is your website, your app, what features you have. Do you have profit switching pools? Do you support merge mining? What is your payout scheme? So PPS payout scheme means pay per share. It means, so Brad, if you have some miners, no matter if the pool mines the block or not, we will still pay you out the same amount every day. Okay. Right. So that reduces your variance. For big mining farms, it's also useful because they want to predict their cash flow. Whereas other pools maybe do PPLNS, pay per last known share. They pay out if they mine a block. So if they mine more blocks than expected, the miners will get more rewards. But on the flip side, if they mine less, they're a bit unlucky, your mining revenue is less. So that's a key differentiator. And then I would definitely say the final layer is the service, the community stuff, like hosting events, making sure if miners have issues, just solving them fast, even to the point where we sometimes get approached by miners all over the world to actually go to their farms, help with their setup, recommending software for management, all this kind of stuff. So that's the final layer that really sets mining pools apart, I would say.
Right, and one thing that was very clear is you do have a lot more, you're associated with more startups or more coins. What's the kind of process for assessing whether or not you're going to work with these? Because I just wonder, there must be some sort of, almost Binance Lab style, where they just go through rigorous research or, really assess the validity of that startup.
Yeah. We have a kind of a checklist to kind of get coins on board. The main things we would consider is, so actually similar to, say, a Binance or an exchange, we would look at the team, the technology, the project, just like any exchange or any investor would do. Mm-hmm. That's very important. And the other thing is actually the mining side. So how much dollar value of the coin is produced per day? We may love this project, but the revenue is so tiny, we have to really make a decision, is it worth to list? Actually, in some cases we will. On another hand, maybe because of whatever reasons, there's a huge amount of daily revenue created from this coin per day. We call it PoW produced. So that's a factor. And then just kind of looking at what machines would actually mine this coin. So we have different coins have different mining algorithms. Everyone knows Bitcoin, Bitcoin Cash, Bitcoin SV is SHA-256. But then there's plenty of other algorithms. So maybe we have a coin already that's supported by this algorithm. So there's machines dedicated to this. So it makes sense to add other coins with the same algorithm. Right.
Okay. And obviously, one of the key parts of what you do as the leader in this space is offer it to so many. And we will talk about some of those. Now, if we go back, though, and explore some of them. Now, some of the ones that come to mind, you mentioned before or alluded to a big event in May with the hydro, and that is the halving. But there's also some big ones that are having a halving before then in April, the likes of BSV, the likes of Bitcoin Cash, as I understand. So do you want to just touch on those, the importance of halving events as well? And are you really paying attention to, obviously, hash power, or looking at, what's likely to come from a halving as well?
Yep. Actually, Ethereum Classic had their block reduction earlier today. So it wasn't a halving as such, but the block reward reduced from 4 ETC to 3.2 ETC. So that was earlier today. Halvings are, I would actually say, for a Bitcoin miner, like the halving is the most important known event there is. As you said, Bitcoin Cash and Bitcoin SV will have their halving. It's projected to be early April, around the 10th of April. The reason, so originally the three blockchains, Bitcoin, Bitcoin Cash, and Bitcoin SV were kind of the same block number. Now, because more hash rate has been getting onto the Bitcoin blockchain, it means blocks are found faster, okay? So actually, oh wait, sorry. I think I mixed up.
That's okay.
Basically, the blocks, the blockchain's got a slightly different levels. So Bitcoin Cash and Bitcoin SV will happen around April 10. So for Bitcoin, I mean, think about it as a miner. You set up your mining farm, you have your mining hardware, you have a lot of costs. Your reward is halved. So are you going to ROI on your investment? That's a very important thing to consider. So I would say miners like buying hardware in the last month or two, this is something they have to really think about. Now, there's definitely people in the community who are very confident or very bullish about the Bitcoin price increasing post-halving. I mean, we're in a very special time now in the past few days with everything that's going on. But for me, the halving is a bullish factor because naturally the supply is decreased from 12.5 Bitcoin per block to 6.25. So you would expect less selling pressure. And from 2012, 2016 block halvings, they were kind of in the middle of somewhat of a bull run, okay? Now, Bitcoin has other things to worry about. I mean, the stock market recently has been going down. Bitcoin's price has been going down. Maybe that delays the bullish run, but as a miner, this is very important. So one very important metric that I encourage people to look at is the daily mining revenue per terahash per day. And over the past few days, it kind of dropped below, it's basically an all-time low. It's around 7 or 8 cents per terahash per day. Historically, the lowest point was around 14, 12, 11 cents. So by going lower, definitely the miners are feeling the crunch. We've seen the impact. So the hash rate, the network hash rate has gone down over the past week. It hit a peak of 124, 125 exahash, which was the all-time high. Last night, it was around 100, so it's around 25% decrease. I haven't looked in the last few hours, but I would expect if the Bitcoin price does not improve in the coming days or weeks, some more miners will have to turn off.
Yes, and that's what I really wanted to jump in and ask you, because it does seem that because of all of the incidents that have happened, the convergence or the confluence of many variables, we know about Corona, now we saw the bungle with BitMEX. I mean, the reality is, though, because of this sudden change, it's becoming more expensive for the miners. Is it your concern at all, especially for some of the older technology, that they're just running at costs now or running in deficit and running in the red? And how long do you think this is going to go through until they start to see a change? Does it require Bitcoin to go up in value for them to be profitable?
This is one of the other interesting topics. It's very common on Twitter as well when the price goes down, is miner capitulation. So some a death spiral. So some people think that if the Bitcoin price drops suddenly, all the miners will have to turn off, and then basically no blocks will be mined because there's no hashing power. It's too hard to find a block. So I personally, I don't think that's feasible. And this is the reason why. It's because, as we know, the difficulty of mining Bitcoin adjusts every 2 weeks, approximately 2 weeks. So how does it work? On average, one block should be mined every 10 minutes. So then when that period ends, that 2 week period ends, looks back to see how many blocks were mined in that period, and tries to calibrate to find that equilibrium of 10 minutes per block. Now, that 2 week period is, you could say, a little long compared to other blockchains. Other blockchains may do the difficulty adjustment daily, such as Bitcoin Cash. But what that means is, sure, Bitcoin price dropped by 50% plus, unfortunately, over the past week. Hash rate's down about 25%. So instead of mining the set number of blocks in that 2 week period, it might take an extra few hours or an extra day, but it still gets there. And then for the following 2 weeks, it's easier to mine. So this kind of death spiral is just not going to happen.
Yep. But what about those that have the older technology? Because we know the next gen of the hardware is coming as well, Thomas, and China's going to lead that out as, you know, they unfurl some of these next gen, and we'll talk about some of those that exist. But my concern more so is those that have got those setups already in place. What's the impact for those that do have to turn the kill switch on for a period of time? Is it impactful from your experience when the price is just so imperative for them to be viable and to be profitable?
Yeah, one really good example is to look at the S9. So that's from Bitmain. The S9 is the highest selling machine of all time, released from memory in 2016, 2017. And from reports, a few million of them still exist, maybe 3 million or less. So I think most miners felt that come halving anyway, those S9s are probably seeing their end of life. Okay, just like with any kind of electronics technology, they come to an end of life. Actually, to go from about 2016, 17 to 2020, that's very solid, I would say. It's 3 or 4 years. So what can miners do? The miners who are more prepared would actually have been selling these machines, say, to miners in other countries with cheap, very, very cheap power. That's one way to deal with it. But the halving itself and having old gen machines, the answer is yes. Inefficient mining operators may or will be wiped out. That's unfortunate, but that's like any kind of business. You got to prepare for this. At least with the halving, it's coming. The Bitcoin price drop in the past few days kind of caught a lot of people off guard, but at least the halving, they're aware of that. And if they were running a very sophisticated operation, they would already be getting kind of pushed that out.
Right, and that's a really good point. And what's interesting, once again, is it does correlate specifically with that hydro season, and that's something I hadn't really considered before talking to you. That's going to be a major boon for you, for China, and for all the mining pools, linked to that region. Now, I wanted to just go back a little bit and just talk about the ease of access to mining pools, because a lot of people don't know how easy it is. It's a case of a wallet. Having access to knowing the process. Did you want to just talk to us about what's involved from sign up right through?
Okay, we'll use Bitcoin as the simplest example. So, let's imagine I have a machine here. So I've bought a hardware and I've set it up here. Basically, I have to connect to the internet. I choose which mining pool I want to use. Each mining pool will provide a unique Stratum URL. So I would enter that onto my machine through an interface. I would also create an account on the pool and put the username in the configuration. And then that's basically it. Then you plug it into the wall and it starts running, and it's very noisy. I'm not sure if you've heard one of those machines.
Yeah, I've heard them. I need a fan, that's for sure. I get hot too.
So the miner's online, assuming you've connected it to the right URL and you've got an account on the pool, your miner within moments will start sending shares to the pool. Basically, they're trying to solve that equation to find the block. Now, on the pool side, you'll be able to see your hash rate, which is your computing power, and it's really as simple as that. You set up a wallet address. Of course, we recommend using a ledger or something very secure. A hardware wallet is always good, but you could set up any wallet address, Binance or Coinbase, whatever you like, and then we do daily payouts. And if you don't set up an address, the funds kind of accumulate in your balance, but again, better they go straight to your payout address.
Right.
It's really as simple as that. Yeah.
Excuse me. And mate, do you make it easy also for people to understand the technology and how it's evolving? So say, for example, they want to look at the next gen tech, to make sure that they're optimizing their own opportunities. Do you make it so that there are links and there's information on your website so people can understand?
Yeah, so we have something, F2Pool.com/miners, where we kind of list out mainstream machines as well as the new ones coming. I feel that miners who have been in the industry for a time, they're already aware about what's coming, because there's only about 4 big manufacturers that exist. But there's that kind of information gap between, say, China and the West. So that's something myself and our team try to help the miners make informed decisions. I mean, even simple things. We throw out some tweets sometimes comparing different models.
Right.
We wouldn't push people to choose a particular machine. We don't have any benefit of doing that. We want to allow people to make informed decisions.
Mm-hmm. Makes sense. So you do have, people have the options. But with regard to mining itself, I mean, obviously we know the reasons for that. It does secure the network. We do need that kind of action to maintain each of the blockchains. Now, I want to just touch on a little bit more on the different types. So you mentioned ASIC, you mentioned GPU and CPU. Now, because of the scope and scale of something like yourselves as a leader in mining pools, is it fair to say that little guy is really just being pushed out though in many ways? When we look at mining, for example, we're seeing the big players there. So is things like mining pools the only way, really, the only inroad for participation at this level?
That's a really, really good question. Firstly, as an individual person, it's still not that difficult to get a machine and put it in a hosted data center. Believe it or not, there's actually these kind of data centers in Australia, which I was fascinated by because I thought the power prices couldn't be that cheap.
Yeah.
But anyway, you could. I mean, if you wanted to do it in China or in the US, Canada, or wherever, you could. Secondly, I mean, you've probably heard of cloud mining, which is like basically renting machines, but you don't own them. For me, it's very risky. There is some legitimate platforms, but you kind of never know when you don't own the asset. There's also NiceHash, which is like a hash rate exchange where you can actually, it's like a decentralized peer-to-peer hash rate exchange, which is really cool. People should check it out. But you know what? All of these concepts, cloud mining, NiceHash, they still use a mining pool. You still have to use a mining pool at the back to really have a chance of earning a mining revenue.
Yep, exactly. So really that's the only sort of inroad for them. Obviously, you're the world leader in doing this. Now, let's talk about some of the tech that's coming. Now, things like, for example, correct me if I'm wrong, but is it S19 Pro or M30S? I mean, I might be saying this wrong. You can educate me. But there's some names coming with regard to the next level of technology. So when are these going to sort of roll out, or are they already?
Great question. I'm going to give a bit of a backstory. So as I said earlier, there's 4 key manufacturers. Bitmain, I think everyone's pretty familiar with Bitmain. They were a key entity behind Bitcoin Cash Fork back in the day. They made the S9 machine, which is the highest selling machine of all time. Then you got WhatsMiner. Actually, the CEO of WhatsMiner is ex-Bitmain. He was the one, I think, that designed the S9 machine. Then you've got Canaan, who recently IPO'd in NASDAQ. They've been around since like 2013 as well, from memory, and InnoSilicon. So last year was a real battle between Bitmain and WhatsMiner. Bitmain had the S17, WhatsMiner had the M20S. And then this year, it was around 1 or 2 weeks ago, they just announced their new gens. Oh, sorry, WhatsMiner a bit earlier. WhatsMiner's M30S, which is 88 terahash, 38 watts per terahash, start shipping over the next few months. Bitmain announced their S19 Pro, which has a whopping 110 terahash, which on paper sounds amazing. I know Bitmain was unable to sell a huge quantity of machines last year just because they didn't have enough kind of supply of the chips, whereas WhatsMiner sold a lot. So that's a big question right now. Like, sure, on paper, Bitmain's machine looks more powerful and more efficient, but would I actually be able to get one? And what would they be priced at? So that's a big uncertainty there. We're just going to wait and see what plays out.
So what do you think is going to play out, though? I mean, you know the space, mate. So what's the reputation? Obviously, is there for both of them, and we know exactly how Jihan works with Bitmain. He is just on the pulse when it comes to being competitive, and he doesn't like to lose. So, what are your thoughts on this in the future? Do they want to come up and try and assume that number one spot that they don't necessarily have now?
So you're right. Bitmain, they're a monster. I say that in a way like they're powerful, right? They've been around. Jihan is ruthless. I mean, I'm not sure how much coverage it's got outside of mining circles, but there was this kind of trouble between Jihan and the other co-founder of Bitmain in late last year.
Right.
That definitely has impacted the company, right? Because there's uncertainty for employees and so forth. On the other hand, I see WhatsMiner as an organization is pretty stable, and they're not loud. They just do it and try and release something. If I was really looking at it, I mean, the recent week has really thrown a spanner in the works, right?
Right.
I would expect WhatsMiner will start shipping machines. They sent out some samples already, but maybe in April and May. I was chatting with them earlier, and there's a lead time of 2 months if you want to order today and get the machine. Now, with the halving, there's a lot of uncertainty. If a miner with a good price of electricity, and now in this current market can negotiate a good price for the hardware, it could make a lot of sense. I actually myself have a few machines from each of those 4 brands just for fun and make a little bit of money.
Right.
I found What's Miner machines very stable, like just really reliable. Yeah. Like I haven't had a single issue with any of them. I have around 10 to 15 of them, and they're running really well. Whereas some of the other brands have to change the hash board or the PSU, the power supply, relatively regularly. So I was happy with What's Miner.
Got it. And obviously the prices need to be competitive as well. What is interesting too from listening to you is that many of these parties are very cognizant of all the factors coming through mid-year and preparing, it sounds like, by making sure they do roll these out effectively for all the parties that are wanting them now in advance.
Yep.
So lots of things seem to be aligning in favour of the halving that's coming, especially considering that there's almost a necessity built in for Bitcoin to improve its value because, that's its oxygen, for the future. Now, one of the things that stifled that, though, Thomas, is the coronavirus. And we alluded to that before in the conversation. How's that impacted not only the mining pool of F2Pool, but also just more generally the more macro assessment of crypto, of the productivity there, given that there's a lot of mining activity there? What's the scene? Paint us a picture.
Okay, so I'm in Asia right now. I think from what I'm seeing on the news in Europe and the States, it's very sad to see. What everyone is dealing with now is kind of what China dealt with in end of Jan, early Feb. I'm happy to say things in China have improved a lot. F2Pool and many other companies, they've been working from home since Chinese New Year, which was end of Jan. We will actually, our team will start working in the office this week. It actually impacted the supply chain. So shipments of machines, say early Feb, were delayed 1 or 2 weeks because of the virus. Silicon is based in Wuhan, unfortunately, so they're probably going to be hit harder than most. So in general, things in China are looking up, which is a positive sign. Of course, the Chinese government took very strong measures. It's hard to say early or not early, but they took strong measures. Okay, hopefully other governments can follow suit and really lock it down. I would say from a global, from a Bitcoin sense, it kind of flows through. So the virus to the global economy, to the stocks, people having not much liquid funds, kind of pulling it out of more slightly risky assets, covering themselves. So it definitely flows through. I think people were surprised that Bitcoin is still quite correlated with stocks. It's hard to say I'm surprised or not surprised. It's still early days. It doesn't make me feel disillusioned at all. I'm still a very strong believer in Bitcoin. There's other factors at play, right? The derivatives market for Bitcoin, exchanges, I think that definitely compounded that kind of drop last week down to 3.6, 3.8K. I think the world as a whole just needs to have more unity and take the right measures. I don't know how long this virus will last for. But I'm sure coming out of this, Bitcoin will be stronger because I think this has kind of exposed maybe the global financial markets. I haven't looked in detail, but about the Federal Reserve saying 0% kind of reserve backing and all this kind of stuff.
Right.
I need to think a bit more. That's
Absolutely.
bullish for Bitcoin.
Yeah, you've touched on so many good points there. One of the arguments put forth, and I think quite reasonably, is that it's too early really to play or use the uncorrelated or non-correlated versus correlated argument, simply because when we see crises like this or a crisis of this scale, everything goes out the window. All you have is situations like Trump coming out and saying things like, we'll provide unlimited liquidity, we're going to bail out those parties at the top. So it becomes the helicopter money. We see all of that play out. But what is interesting is that there are already reasonable suggestions. Pomp's said this many times, is that perhaps we're going to see more and more proof as time goes on of that non-correlation, which is very likely because we're going to probably see that with gold as well. So perhaps, crises aren't a great means of evaluating whether or not something has its own asset value. And like you said, it's very likely that Bitcoin is going to stand alone as an asset class, as that risk asset. Now, if we go back to Corona for a moment, though, the coronavirus in China, what I want to understand, many of us around the world still don't know, what is the current situation there with regard to the pandemic status? Because many countries haven't even, experienced what China's been through. Certainly in my country, we haven't yet experienced sort of the magnitude of this, when the wave really has hit right through.
Yeah. So back in end of Jan, early Feb, basically, people just had to get used to the fact they have to just stay at home. So my friends so I'm actually not in China right now, just by chance. But my friends and my colleagues, they've been literally at home for weeks. Okay, now things are starting to open up. The cases, there's that curve, right? And the cases are less and less every day. Now the biggest concern is people from overseas coming back to China and bringing the virus back. So actually Beijing announced, I'm not sure if it's announced or a rumor, that anyone from overseas will be quarantined for 2 weeks. Okay. I've had friends come back. One of them has been in this kind of shitty hotel for a week, and they're taking it very seriously. I've seen the pictures from the Beijing airport and other airports of absolutely packed. If you imagine 3 to 5 weeks ago, no one was taking flights. Now it's everyone's coming back, Chinese and some non-Chinese. So hopefully it does not start a second wave. That would be very unfortunate. But yeah, as you can see, China has very strong measures. Anyone that goes back, so that's, if I go back now, I have to stay in a hotel for 2 weeks.
I see, and that's a proactive measure, because the 14-day incubation period is real. But I wanted to understand, from your knowledge of China, and obviously having all the connections, family, friends there, and obviously being based there for the most part, has much of the sort of trade, the economy, just the buzz of the space, has it returned back to somewhat of some semblance of normality? Are people returning back into work yet, or are we still too early for that?
It's starting now. That's what I would say. So companies some of the factories started to open up over the past few weeks, definitely not at full production. And then more of those kind of office companies, startups and so forth, a lot of them are still working from home. But as I said, F2Pool and some other companies this week now working from the office.
I see. So does it surprise you when you see a lot of the news that comes from the West? Because just for example, and this wasn't fake news, someone I know and respect, he's the CEO of Celsius Network. No plug intended. But he did an interesting tweet today, where he was showing that, downtown in Manhattan or in New York, it was just completely dead down the streets in the middle of the day. So a lot of people are very fearful of this now that it has arrived and it's quite serious. But it does sound like things move very fast with this virus. And then if they get a hold of it very quickly, life goes on within months. Things start to really improve quite rapidly if the response is fast.
That's what I'm hoping. I think, there's many countries have different approaches. Definitely the ones that kind of didn't really have those proactive measures earlier was, say, Iran, Italy, and some of these other European countries. I'm not really sure to judge the US's response as slow, fast, or in the middle. I just hope now people really take it seriously. I mean, I don't think the mortality rate is that high, but those people may be older people or those with other conditions may be at most risk. So even things that probably non-Asian people wouldn't normally do, such as wearing a mask. I mean, when you go outside, even if you're not sick, I think just do it. Maybe you feel that it doesn't do anything, but it doesn't hurt.
Right, you raise a great point, and obviously education, people being informed is honestly the key. Even for all of us Aussies, being in an island doesn't mean we shouldn't be informed and know what's coming, because none of us are immune to the presence of this virus. But what is interesting, you mentioned a really important point, and not enough people perhaps look at the recovery rates. They tend to focus on the reports of death. So hopefully in time we'll see more of those positive reports. We certainly weren't sure about China. That's why I asked, because a lot of people doubt what is true and what isn't out of China when it comes to media. But it does sound like there is, a return back to the bustle, back to the business. Got it. Now, mate, one of the things I wanted to talk to you a bit more about is moving across to BTC halvings, the halving specifically, just in terms of what your views are for optimization of, the network itself in terms of price estimates. What is the optimum price do you think it needs to be at the point of halving for miners more generally?
That's a really, really interesting and deep question because, well, I'll walk through what are the key metrics. So you have a machine and it has a hash rate, computing power, and a power consumption. From those two numbers, you calculate the efficiency measured in watts per terahash. So obviously the lower is better. Those S9s we talk about is around 100 watts per terahash. The M20S is 48 watts per terahash. And the S17 around 38, 39 from memory, or 40. So it really depends on your power price as well. We sometimes send out charts, and you'll also see it from our website. What is that break-even turn-off price? I can't remember exact numbers from the top of my head, but I could say that those old gens, like those S9s, which may make up 30 to 45% of the whole network right now, that's around $8,000 Bitcoin price at 5 cents standard price electricity to break even day to day.
Okay,
now,
so there's a lot of people out there. There's a lot of percentage, a big chunk that really want it to be 8K.
And that's before halving. So it's tough, right? So that's probably the majority of the machines we've seen turn offline in the last week. That 25% hash rate. It's all gen machines, probably from Bitmain, some from WhatsMiner, some from Canaan, some from Inner Silicon. Now, as we said, halving's happening, so then you just essentially double that number and you kind of have a rough ballpark figure. So for those machines to run at 5 cents power, 16K. But what's actually going to happen is people have already been and will continue to find cheaper sources of power rather than that 5 cent level. Maybe you send it to the Middle East or South America, based on where you are. You find a farm to partner with. They don't charge you for electricity, and then you kind of share your profit share on the profits of the mining. That's what people do in general. There's definitely many different business models overall. But I would recommend those metrics to look at, which is mining profitability per day per terahash, as well as that turn-off price. From this, you can work out like who's profitable and who's not. So as a final summary, the most important metric for any miner is the cost of production, which is the cost to generate one Bitcoin. The lower you get, the better.
Right, and clearly, given the significant percentage of those who are currently in the red, there's a strong incentive for all parties involved to really want to see an increase in the value of this asset. That's really trying to change the game when it comes to being a digital asset that is peer-to-peer, that is 24/7, and then we also like some derivative trading that's really challenging things. Now, on that note, I want to talk to you about the recent bungle. I'm very vocal about it. I have my own views on it, but I'd love to know what you think about what happened with BitMEX. We saw the situation where there was a bit of toing and froing from different exchanges. From FTX, we saw very strong sentiment from Sam, and then a response back from BitMEX. But there's no question that there was a bot involved. There was an attack, and it certainly led to a significant cascading event where we saw the price of BTC really, really collapse, in this very serious situation. So what are your thoughts on those kinds of centralized issues that can really, really damage the confidence and integrity of everything that we all are trying to build?
I think it just shows that Bitcoin is still in the early days, and these kind of products, although there's a market for it, it can cause a lot of damage. I haven't looked into the BitMEX situation deeply. I did see Sam's thread on Twitter. And from what I remember, BitMEX's response is about increasing transparency of like the insurance fund and everything.
Right.
That's the direction we need to go in. I don't know the detail of what exactly happened then. I would say there's still some companies, from 2016, 2017 that operated in a way that is not not sophisticated enough. So transparency is important. Making sure there's not too much risk on the overall market. But then apart from like these derivative products, just exchanges in general, centralized kind of financial products. I mean, there's a number of them that do lending to miners. Actually, in China, there's a few large ones. And as you can imagine, a lot of people got liquidated and there's a cascading effect. And then I just thought of another thing, which is DeFi. So DeFi, there was a lot of liquidations, makers going through some interesting challenges. From what I saw earlier, they're looking to add USDC as...
Yes, because the deficit's now in a couple of million. I mean,
exactly.
It's a case of quite a serious situation that they rallied together, which was great to see, I think, in a decentralized situation, but never a scenario that you want to see play out. There was just too much pressure in that instance when it came to that.
I have a personal story. So there is actually a decentralized platform called Atomic Loans. They are doing like atomic swaps of Bitcoin. So basically, and it's kind of targeted for miners right now, where I could deposit my Bitcoin and get some stable coin as a loan, borrow it. Now, I have a small amount of Bitcoin there from a few weeks ago, and my liquidation price when I set the loan was 5.8K. I remember last week, I saw the Bitcoin price was 6.4K. And I'm thinking, you know what, maybe I should pay back some of the loan. And within 2 minutes, it went from 6.4 to like 5.8K. And I'm like, holy shit, I'm at a big risk right now. Combine that with the fact that the Ethereum network was very clogged. You probably remember that last week. So it was hard getting DAI in to pay back part of it. Luckily, I escaped. So I paid back part now. My liquidation price is 3.8K. But I think it's just a wake-up call for everyone that these kind of black swan events can happen. And you have to be prepared. Like even for me as an individual, as a small-time player, right? I don't want to lose like a couple of Bitcoin.
Right.
You know?
Well, you know, if we extend this not to sort of create some sort of overarching fear or, you know, universal fear, but one of the responses from BitMEX, this is not from any other party, and they said that they did have a major technical failure. They are their own words, and they stated that they were working through compensating some of the parties, you know, from the last swap, or that you know, with regard to what happened. There's some questions, as you mentioned, about the insurance, but the bigger question more so is, what is the impact of this when we know it was so substantial? We're talking billions of dollars, you know, in liquidations. But more to the point, as Mike Novogratz was saying today, confidence itself is an asset when it comes to something like this space. The damage has been done, you know, when it comes to the more transient, you know, issue. And when we see that coupled also with coronavirus, I mean, it's the last thing that anyone in crypto wants to see, is that there's the culpability, you know, from the team. Even if it is a technical issue, it is, you know, something that they'd have to address and redress. So is it something that we should be taking even more seriously, knowing that these things, these technical problems can actually cause, you know, these cascading events, these serious outcomes where billions of dollars have been lost and liquidated? Because I think that, you know, once again, we maybe don't talk about this so openly enough, you know, in fear that it's going to, you know, affect, you know, the prosperity of Bitcoin. But if we don't, we may be at risk of not understanding that these centralized parties can have these problems again. So
I think it's a responsibility of both the platforms and the individuals. I really hope that, say, a BitMEX, they do really look into it and really increase the transparency and identify what was the problem, communicate it to the community. But more so, individuals, as a miner, as a hodler, as an investor, don't over leverage yourself. You know, you got to manage your risks, and because no one wants to see this happen. I mean, I don't know what would have happened if BitMEX didn't go offline and the Bitcoin price had gone further to $1,000 or less.
That's the big question.
I would have thought. Right. But you know, you're right. People lose confidence. Do
you think, Thomas, people have lost confidence? Do you think that the outcome of this is that a lot of people will never come back?
From the circles I speak in, the answer is no. I don't think it really damages the confidence. I think it's just a minor setback on all of our journeys. But, you know, I'm not talking as much to that kind of casual, everyday hodler. Maybe, actually, what do you think? Have you been chatting to?
Well, I actually agree with you. I think that what's happened from my own macro assessment is that derivatives are now, the hot conversation, and for that reason, there's much more sort of momentum in that direction, and there's much more acceptance of volatility, in its own right. So, like you said, your response of if it went down to $500, you'd buy it. I think that's the common consensus right across the board, is that volatility is the norm. And so it's interesting when you see the traditional markets react in the kind of FUD that we see there. Literally, when things move 10%, everyone's like, 10%, are you joking? So I think there's that plasticity for the youth, that are engaging in crypto. I don't think that we were regarded this as trivial, though, not at all. And that's why I'm asking you with regard to the technical sort of risks inherent in decentralized parties, because derivatives are now having such a major role in crypto today.
Just on the volatility point, I think it would be very interesting to analyze volatility over time against kind of the inflation of Bitcoin, so the block rewards. So with the halving, the supply will be decreased to 6.25, and then in a few more years 3.25, and so forth. I imagine we'll get to a point where those block rewards are smaller and smaller, and the miners themselves, we won't see that kind of exponential expansion of mining farms and so forth. So rather than seeing this huge volatility on the Bitcoin price and also that daily mining revenue, it's going to get tighter and tighter. I think that's what we're going to see. But as you said, these derivative products can add systematic risk to Bitcoin as a whole.
Yes. Yeah, and I had a look at the volatility index as well, and I'll put a link down below for those who want to have a look at it. You are right. There was a lot of flux recently, though, and as you alluded to, the addition of derivatives is now another layer of complexity, let's say. What are your thoughts on that in terms of, the reality that this is still a nascent space as a spot market? We're still trying to establish this and assert this as an asset itself. Do you think that, that now that the genie's out of the bottle with derivatives, is it a good thing that it moves so quickly? What are your thoughts on that?
Well, it's hard to say it's good or not. I would say the other interesting thing from the mining world is that a lot of organizations are looking to make hash rate derivatives. Okay. So just to give a bit of background, as a miner, there's three main inputs, we will say: Bitcoin price, the network hash rate or difficulty, and then your electricity price. Okay. So your electricity price is somewhat more stable than the other two. Bitcoin price is volatile, but you can buy derivatives, you can buy futures options to minimize your risk. And then that network hash rate one, there's not really a sophisticated way to short or long that. So there's a few companies kind of building that now. Some of them are platforms, some of them are brokers. I think that's a good thing because it allows miners to be able to hedge their risk more. Going back to the Bitcoin derivatives, well, yeah, the genie's out of the bottle. As we said, these platforms need to be more transparent, more responsible. But if they were to take away some products, someone else will come in with them and make them because there's a demand for it now. And right. I think there's just with the mining world and that knowledge gap between the East and the West, this whole kind of crypto finance world, trading, hedging, borrowing, lending between East and West, you probably have not much idea who are these big platforms in China, right? And the amount of money that's going through. Honestly, right now, I know the platforms, but I don't know the details of how much money is going through. But it's very possible it's huge sums of money and maybe not done in a very responsible way. So, yeah, that's just a statement.
I think you raise a good point. I mean, a lot of people, start trying to grapple with the gravity of derivatives now that they are certainly affecting markets where derivatives are now openly traded. We saw the likes of question marks come up early on when some of the less liquid startups with their token started to be traded in that realm. And it was very questionable because there just wasn't enough liquidity. Now, let's talk about some of the tokens that you do have on your platform that don't necessarily, perhaps have the big names in terms of the brand. They certainly don't have the big liquidity like BTC, for example, but they're growing. I've been watching. So Nervos, for example, That's one. And then there's others, but and you have a whole suite of them actually. But because they're POW, because people are essentially mining them, how's everything going for that sort of end of the continuum? You know, those lower caps that are really trying to push forward.
Yeah. So POW projects kind of have a life cycle, just like Bitcoin started CPU, GPU, ASIC. So I'll play out a few examples. Let me think of the projects from the start of 2019 until now that are kind of well respected or well known. So there's the Nervos, there's Grin, there's Beam, there's one coin Tellor we're going to launch this week, and HNS Handshake, which is a very interesting project. So
yes,
all of these coins I've just mentioned, they start with GPU mining. Okay, that means people with their graphics card, maybe they're mining Ethereum or ETC, then they can decide, you know, maybe it's more profitable to mine this, or maybe it's just an interesting project, I want to mine it. Then when the network starts to pick up traction, people start to build those more specialized machines. Now, I actually didn't mention earlier, there is one other type of miner called an FPGA. So I'm going to explain GPU, FPGA, and ASIC.
Okay.
GPU can mine a lot of different mining algorithms. So with a graphics card from NVIDIA or AMD, maybe there's on F2Pool maybe 10 to 30 different currencies you can mine, right? Now you've got an ASIC, which is the other end of the spectrum. It only mines one algorithm, okay? So maybe it's just mining ETH hash, so Ethereum, Classic, and so forth. Then you've got FPGA in the middle. It can kind of mine a couple different algorithms, and just the computing power is much higher than a graphics card. So generally what we've seen on launch is that the project teams kind of work with mining farms to kind of get an amount of hash rate committed. We almost call it like, what's the word, like defense mining, because, you know, as in early days as a project, you could be susceptible to a 51% attack, which is probably the worst thing that can happen to a POW project. So they'll work with some mining farms, get these like GPU mining farms to support them and mine it, and everything goes smoothly. As the hash rate grows over time, the price may or may not go up over time, but then people look at doing FPGA miners or ASIC miners. But to do these, to make these, is a lot of capital required. So this is a huge investment into the network.
Right.
So if someone decides to make an FPGA or an ASIC miner, it's a positive sign that people believe in the network. So for example, Handshake, Nervos recently had these machines announced in the past few weeks. They'll start launching in the coming weeks.
Right.
Even Tellor TRB, I've seen there is a company called Multminer, also in China, that are making an FPGA that can mine CKB, Handshake, and Tellor.
Okay.
Now, I just want to say very clearly to everyone, it doesn't mean you should just buy one, because
that's
the
important.
mining revenue may be good today, but if everyone's mining with a GPU today and then these super powerful machines come online and just destroy the profitability, you've got to consider that. Yep. Secondly, the shipping time. But everyone should do their research. It's very interesting, though.
Yeah, I want to talk more about that so we really understand. So, because I looked at the listings of the POW rankings that you did, you outline. It's very clear. And number 12 and number 13 come up with Handshake and then with Nervos. And I found that interesting because they're not necessarily, you know, the most known startups, but they have a lot of respect in the space, especially something like Nervos. Handshake's really starting to come up now, as you know.
Yeah.
And then obviously I'm a huge supporter of Tellor. Everyone knows that. I shill that all the time because not only did I invest in that, but I genuinely believe in that use case as a DeFi Oracle, the way they've approached this for security first. But in saying that, can we talk a bit more about, from your experience, what is the impact, empirically, when something like Nervos or when something like Handshake starts to really engage with something like you guys? What tends to be the process that plays out? What actually does tend to happen from go to woe? Okay.
It's kind of interesting because it's a little bit similar to exchanges and how all of that works. So let's say Nervos. It was a project that we were aware of before the mainnet launched. We actually did some events with them to raise awareness and help them out. Basically, from the F2Pool perspective, we want to analyze different projects to see if it's worth supporting. And actually, the ones we just mentioned are coins we supported on day one of mainnet or shortly after.
Okay.
What you normally see is it's like there is a community a community of spec miners, speculative miners. It's very interesting. They're trolling Bitcoin Talk, 4chan, Reddit, trying to find these interesting currencies. They'll mine with a GPU, they'll mine with NiceHash, and then wait for the time when these larger companies start to pick it up, whether it's a mining pool, whether it's an exchange. So we haven't actually launched Tellor yet. We're kind of going through the final steps. We're setting up the pool, talking with the team. So I've spent quite a bit of time talking with Brenda, Mike, and Nick from the team, just to understand their vision. I mean, even the Atomic Loans guys, so I mentioned the DeFi, they've been having discussions about using that Oracle for their kind of DeFi product.
Right.
So it's very exciting, actually, just to even be like a small part of these projects. But basically, okay, we find a project that's interesting. We do the analysis. We look at the revenue, the profitability. We think it's cool. We launch our servers. We consider, do we just do our servers in China? Do we just do it in North America, Europe, wherever else? And once we kind of want to build a relationship with the team as well as the community, and all we want to do is just raise the awareness. And of course, if we attract more miners, then it's good for us. Simple as that.
Good for you and good for them. Now, from your experience, what's it been like, when, through all of the different startups and the coins that have listed, is it a real mixed bag, no pun intended, when it comes to the success of these tokens? Because obviously, as I mentioned, back to Tellor, that's coming for you in the sense that you're engaging, it's going to be launched very soon. From your experience, has it for the most part been positive for those startups, in terms of not just price appreciation and obviously, getting their name out there, but just having that support from the industry at the very, fundamental level of mining, getting more hash power, getting more of that, that mining engine firing in a decentralized way?
Yeah, so I think the projects we've mentioned, they are all legitimate, reputable, interesting projects. I mean, I think back, there's actually a lot of new PoW coins created all the time, lots of forks. I remember like 2017, 2018, a lot of these forks will pop up. They'll have a dev team that will work for a few months. And they'll try and get on exchanges, try and raise awareness, but it just doesn't get going. So we also, as a pool, we don't want to just list a coin that's going to be around for a month. It's not a good look, and it's not really supporting those projects that need the support and will use it and grow something valuable for the community. Right. So we definitely have a tight listing process now, I would say. But yeah, that's how we really look at new coins. It's
interesting. And also, obviously, you looked at the economic sort of approach that Tellor took, for example. Again, not to shill it, but I am obviously shilling it, by circumstance. But when I looked at it, I noticed just how much time they'd spent redressing some of the economics of it as well, so that it was more there was incentivization for the miners built in. Yes. They'd done their own model where they'd reduced the block rewards. They'd made sure that they'd addressed the inflation. So that only just kicked in. Do you look deeply at that kind of stuff? Do you talk with the team about the changes they've made so that, again, it aligns with your needs to have a coin that makes sense?
Exactly. And let me just share a little bit about the interesting aspects of Tellor mining. So one thing is that miners have to put forward a stake is 1,000 TRB from memory.
Yep.
So actually, as the pool, F2Pool, we are putting that forward. Okay. And then the miners themselves don't need to do it. Okay. So the reason that stake exists is to prevent malicious actions by miners against the network.
Right.
So actually, the pool is putting that forward. Tellor right now is mined using GPU. As I mentioned, there's an FPGA in the works for it. But yes, we have an open dialogue with the team. As a company, F2Pool, this year, we want to do more with each of these PoW projects. I would say up until now, we've done a decent job. We've engaged with communities, engaged with teams, but we want to really take that to the next level. And TRB is one we're looking at right now.
Right. And it's interesting too, because we were discussing this pre-interview. You're pretty connected as well, Thomas, because you have to be, in your role, because you do represent the entire F2 pool and, world leader for what you do. So in, your support for these, not only is it because of, there's an aligned interest for the economics and for the asset. But do you also support them in much like, for example, Binance do or Coinbase do, or any of the parties that have their own, I guess, allies in the space? Do you really help connect them? Do you help build the narrative for them? Because once again, the narrative and confidence come part and parcel with the success of the tech and the token.
Yeah, so I think one thing I like about the crypto Bitcoin community in general is that people are very willing to help each other out. I mean, that's just like a very positive thing. You're right, being in China, actually with the TRB team, we might do an AMA for our Chinese community. I think the Chinese miners are not too familiar with TRB yet, but they're starting to. We regularly do AMAs. We've done about 3 or 4, because of the coronavirus, we've done 3 or 4 like online events in the past few weeks. We did one with ETC leading up to the halving. So there's been times where a project team has spoken to us, been like, okay, would there be a mining farm that would be happy to help us support the network in those early days, providing hash rates? Or maybe a project talks to us, says, do you know any manufacturers that might be interested into building an ASIC for our coin?
Right.
That's something we do. I mean,
or do you know a team that could use an Oracle? Those sort of things.
Exactly.
Right.
So actually, exactly right. Yeah.
Yeah. Well, it's exciting to see because it seems to be that you are very focused on looking for the best that you can find. And there's a lot of people suggesting that once you have one technology emerged, like we've seen, for example, Chainlink, very prominent, very much respected name in the space. Is it your position that there's room, for more when it comes to multiple oracles, for example, or just the fact that you can have multiple platforms, multiple PoWs, as you've got a lot of them?
Myself personally, I'm more of a fan of proof of work over proof of stake.
Right.
I was actually going to ask you, what do you, because I think you've spent a lot of time really understanding it deeply. What do you see, and I'm genuinely curious right now, what do you see as the main value proposition that TRB provides in comparison to Chainlink, for example? They're the 2 oracles I come
That's a good question. And I don't want to disrespect anyone who is a supporter of Chainlink. I even own Chainlink, believe it or not. But for me personally, what I can honestly tell you is that I am very much a proponent of decentralization and, more importantly, trustlessness. So what I'm looking for, again, I would say this even if I didn't own TRB. That's important. I really love that it aligns with the interests of, for example, Ethereum's core value from the outset, even Bitcoin, for example, in that when it comes to security, to me, that's the most important thing. So with oracles, obviously, you do want to have a very fast and expedient oracle. That's a necessity, some would argue. But even more than that, the proof of work, especially a hybridized one, the first and foremost, component of that is its security, so that it can operate and it can build its, other aspects of the trilemma. So that's the big difference, honestly, is that with Tellor, they spent 2 years, in the background trying to forge and create something that was an oracle that eventually could have real use case, from the security out, if that makes sense. Now, if you don't do that, you have to ask yourself, well, what do you actually have? Is it going to be create a situation where there's risks for the price reads or risks for the smart contract later? So again, there's trade-offs, but that's the truth of why I really looked into Tellor and why I took it seriously. And obviously, they're a small team, and I know that. But there's always going to be things that people will vie for or play off on each other. But I've always said in the Oracle domain, I think that's a dangerous game because everyone is truly trying to find their niche, their market fit. And Chainlink have approached this, and I have to say this honestly, there is really no team in crypto earth that's done a better job of marketing. There really isn't. Chainlink have just injected steroids into their marketing team, have really led that narrative very well. So, kudos to them. But when it comes back to the old, the tech story, for me, it's got to be security first. And, what do you think? Because I'm a big fan of PoW more than I ever thought I'd be.
You know who I should recommend, if you're interested, is to talk to the guys from Atomic Loans, because firstly, they're building DeFi on Bitcoin in a decentralized way. and using atomic swaps, and they themselves are considering to, or maybe I shouldn't say this on the call.
Say it to me next time, we'll catch up. We'll have a conversation about that.
But they're looking at Tellor as well as an oracle.
That is interesting. Okay. Because, right. Yeah, and to be honest with you as well, Thomas, months ago I may not have been as such a fan of PoW as I am now, but it's only because I'm really starting to understand the imperative of security. If you don't have the bedrock built out, then it's very difficult to then, and let's talk about that in the context of DeFi. I love DeFi. Everyone knows I'm a major supporter of that innovation. But if the bedrock isn't sort of verified, if it isn't proven with that strong probability of proof of work, then it doesn't mean that POS can't work or something beyond that. But the question will always arise, is that more a means of just setting aside a stake, for trying to build the ecosystem, or is it built into the integrity of the technology? There's a big difference there. So that's why I'm really excited about the potential of POS and beyond. But I don't discount any more the value of PoW. There's no way I can.
There's a few things I just want to throw in. So as most people watching are probably aware, Ethereum is transitioning from PoW to POS. It's taking a long time. That's a direction Ethereum's taking. Secondly, in the Ethereum community, a very hot topic recently is called ProgPoW.
Right.
It's to change the mining algorithm of Ethereum so that ASICs cannot mine Ethereum. So that's another very interesting topic, probably for another day. But basically,
that's a hot debate.
So basically, some members of the community feel that ASICs aid centralisation, which is bad for the network, and then some argue that ASICs are good for the network. That's just another interesting topic.
And often there's different camps. There's miners that tend to be proponents of one of those arguments, and then, as then there's the true sort of, I guess, the libertarians, or those that want to make sure that the true peer-to-peer nature of this can blossom and build from the PoW. So it's going to be interesting to see what plays out, and that adds to another layer of complexity, actually. A lot of people have a big question mark about the evolution of Ethereum, and I have to tell you again, I've invested in Ethereum because I just really respect the innovation, the endeavor. It doesn't mean that I'm right, and it doesn't mean that someone should solely and wholly just stick with something true and tested. But again, I don't discount the value of something that is, if that makes sense.
For sure. And a lot of people ask me, do miners actually care about these kind of debates? Okay. Another good example is Bitcoin Cash. I'm not sure if many people have seen this, but a few weeks ago, someone proposed kind of like a dev tax embedded into the Bitcoin Cash protocol. Now, this was met with a lot of negativity. Like, there's two camps right now. So what do the miners actually feel? Actually, there is definitely a subset of miners who, more than just wanting to make money, care about the health of these networks. But for the miners that want to just focus as a business, which I think is totally reasonable, they prefer things are done smoothly. They don't want to see chain splits and these kind of things. So I think with these kind of discussions, you've got the developers, you've got the miners, and then you've got the token holders. So it's a very, very interesting dynamic, I have to say.
Absolutely. And then on top of all of that as well, Thomas, we have one extra layer of interest, and that's the institutional. We kind of hear narratives that aren't yet proven with the amount of institutional investment today. We don't really know those numbers, but we do hear the likes of things like backed. What is exciting is that we're starting to see legit startups like, for example, Starbucks, starting to really vocalize, really starting to, especially now with the coronavirus, is saying, look, maybe we need to put more explicitly options on the table. And then we see the likes of Azure and Microsoft being involved. We see also things like baseline protocol coming, enterprise potentially coming. Then we've seen the likes of alliances, even, going back to the Oracles, Chainlink, Unibright. There's a lot happening in this space. ETH, another one. So what I think is interesting also is we're starting to see a greater evidence of legitimacy of crypto. Do you see that as well happening?
Definitely the progress is slow, but definitely in the positive direction. And I think that for people who enter the space, and I don't mean just actually kind of buying coins or investing, the vast majority who get into the space are impressed by not only the technology, but also the community and the belief that we are building something that is improving the world and will improve the world for many people. I have to say I'm very, very mining focused these days. I can share that over even the last 6 to 12 months, even the last 3 to 6 months, more kind of institutions are looking to get into mining because they see mining as the backbone of the infrastructure of these blockchain networks.
Oh, tell us more. You know, that is interesting because we don't hear enough of that side of it, and I don't want to miss this chance. So if they're looking at the big money and the money's in the security of the PoW, the provabilities there, how, you know, what are the conversations you're having? You know, who are these parties? What's actually going on?
Okay, so there's actually a company in Australia. I was quite excited when I found this. Their name is Iris Energy. They've been setting up data centers in Canada, and there's plenty of, say, family offices or just these large organizations such as SBI that want to get into crypto. So what are the conversations? Basically, they have limited background. Okay, so they definitely rely on working with people in the mining industry who understand it. They see it as an infrastructure play. They see it as setting up data centers. The idea is to mine Bitcoin or Ethereum or these cryptocurrencies. And the idea is to get the cost of production as low as possible. The advantage of, say, Ethereum mining or GPU mining is that you can actually use your data center to do other things. It could be for AI, it could be for video rendering and this kind of stuff. So it's not just only mining Bitcoin. But basically, it's they don't have much background knowledge. So it's really working through them to really educate them.
I see. But it's so great to know that they are looking at the mining aspect, because I certainly haven't had that conversation with anyone before.
Even
to hear
Fidelity has a mining division now, and they're getting into it. So
well, yeah, clearly there's real profitability as well, and many parties, especially institutions, will follow the money trail. So everything seems to be, from what we've discussed today, everything seems to be, you know, on a good trajectory upward. We can never know exactly what's going to happen, but a lot of people are looking at all of the different events that have happened and arguing that either we're close to a bottom or we have bottomed. So fingers crossed with all the things that are happening, Thomas, with the hydro, the alignment with halving, all of the other things that are going on in the back end that you're doing, the alliance with, you know, institutions as well, and also on top of that, just the fact that mining is popular right across the world. Things are looking good, it seems.
Yeah, the past week, I mean, the whole world is in turmoil, we can say. Hopefully from that level, things start to improve. And yeah, for Bitcoin, I think some people were kind of shocked about being very correlated with the stock market, not having a safe haven. For me, it's just a small bump on the journey. The value proposition of Bitcoin has not changed. And yeah, let's just keep moving forward. It's exciting times.
It certainly is, mate. So thanks for letting us know about that hot news with Tellor. That's obviously good to know. It's great to know also that others, you know, like Handbrake, I am watching that one actually. Nervos I've interviewed them before. So there's a lot happening for you. Once again, if people want to know more, I'll put as many links as I can below to access information about F2Pool. But Thomas, thank you for being that representative and letting the community know, as you do, all the updates, all the information, because we just simply can't get enough of understanding what mining is about, what mining pools do, and just how integral they are to the future of crypto. So thanks, mate, on behalf of all the people for your time tonight.
Thank you, Brad. It was a lot of fun. Hopefully we can do this one more time again. And yeah, if you have questions, Brad, or anyone in the community has questions, hit me up on Twitter, and definitely love to engage in a conversation.
Likewise, mate, and go the Aussies. It's great that you're representing, and we will catch up again.
Soon, yeah.
yeah, and we'll catch up again soon. Thanks again for your time, mate, and I will hit you up. See you, mate.
Okay, see you later.